Alright, what's up guys? Today I'm going to be recapping the trades. I think it was like 5 trades to make me $4,200 in 3 days of trading supply and demand. So this is my last video, right? And I'll just show you this supply short trade that I took. You can see took profit very quickly. You can see that's the account balance, past account profit and loss was $1,170. So that was the last trade that I took last week to pass the account. And then you look at my P&L calendar and you can see like, what's up with this? Why are the numbers here so big and the numbers here like very random? Well, before this week, or actually before Tuesday the 3rd, I was trading a different strategy that wasn't supply and demand, as you can see by that loss. And there was another loss before that. I wasn't doing so good. I was trading a different strategy. It wasn't a good strategy. And Tuesday, well actually it was Monday that I started trading supply and demand, but I was using one contract, so that's why the balance is still so negative. If I was using the same leverage that I used to lose the money, then the balance would have actually been a lot higher. And then after that, I would have just passed the account very quickly. But instead, I just spent a lot of time like learning supply and demand. So this is last week, the 16th through the 19th. That is whenever I was like, oh shoot, I gotta pass this account because it's expiring soon. So I locked in, I traded supply and demand, and yeah, it was actually very easy, and I'm going to show you how I did it. So yeah, and also I said I made like $4,200 trading supply and demand, but the week only says 3.9k. Well, that's because I think one of these trades wasn't a supply and demand trade, so I'm not going to be including that in this video because I'm not going to waste your time, and that's not it's not part of my trading plan. It was also a mistake. I thought it was an inverse fair value gap, but it actually wasn't. It was a regular fair value gap, which I don't even trade, by the way. I only trade supply and demand. So let's recap the trades. So let's see. So the first trade, I know all of these trades by number, right? And all right, so this is the first trade. So this candle right here, this is the last candle before an impulse candle. And an impulse candle is a candle that creates a gap in price, which you know them as fair value gaps. Some people call them fair value gaps. Some people, the person who taught me, James, or JFX, he taught me that they're called imbalances. That's what he refers to them as. So imbalance, fair value gap, whatever you want to call it. And basically, that is a good indicator that the strength of the uptrend is strong if it's creating an imbalance in price, and what you want to see is price come back and fill the imbalance. So this was the last candle before the impulse that broke a high. It's not on the screen, actually no, I can just put it on the screen. Hold on, let's see. So I think it would be right here, right? So yeah, this is the 5-minute time frame. So this was also, this imbalance, you can see it right here, it was also a 5-minute demand zone, because this is the last candle before the impulse move that broke this substructure swing high. Because major swing structure is this entire impulse right here, but sub swing structure would be like this impulse, that correction, this impulse, that correction. So you gotta know the difference. So yeah, you just gotta know the difference. So price ended up sweeping that low, but it didn't invalidate the demand zone. It formed a big bullish engulfing candle out of it and an inverse fair value gap, which I don't trade inverse fair value gaps, or even, I guess I consider them a little bit, but I ended up entering off of the inverse fair value gap whenever price came to fill the fair value gap, and I made my stop loss 4 points because I only wanted to risk like I think 400 because I was already $800 in drawdown. I passed this account while being $800 away from blowing the account. So instead of only needing to make 3K in the combine and having 2K drawdown, I had to make 4K and I only had $800 drawdown. So that just goes to show how much better this strategy was, that I was able to do that. So yeah, this trade hit took take profit, and actually, if I show you, oh, and the trade was like 14 points, I think. I was actually supposed to make it 15 points, but since I did all of this on my phone, like I took this trade on my phone. I didn't do any of this analysis whenever I took this trade. All I did was notice there was a demand zone right there and an inverse fair value gap. And yeah, if I did go long off of the demand zone, which I wasn't able to because price, like, whenever I got on the charts, it already filled the demand zone, and I typically use limit orders, not manual entries, which is what I did in this trade. But yeah, price ended up filling that inverse fair value gap. And yeah, that's the trade. Trading with the objective, and the objective was, well, actually I kind of traded against the objective because the objective was to fill this swing structure 15-minute supply zone, which it ended up filling there, right? And I traded after it was already filled. So if I had like a 2 RR, if I traded that with like 2 RR with that zone, then I would have actually lost that trade, just because the objective was already filled, and you know, sellers were a lot stronger. So yeah, that's the first trade. Let's move on, because I actually, like, bro, I'm not gonna lie, bro, like, I've been working, I've been trading, learning to trade, and I'm like ready to go to bed. But anyways, let's get out of here. Let's get to the next trade. So, but I really wanted to make this video. Like, I was like, I really want to make this video before I get in the, before I take my first trade in the XFA. That didn't freaking happen, but it's okay because we're already cooking on the XFA. Even though my execution today has been genuinely horrible. I missed out on much more than $228. My execution today was genuinely horrible, but it's okay. See, 8 trades, and I think like 6 or 7 of them, I think 6 of them all hit take profit, but I put all of them at break even. So yeah, that was cool. This is another trade that I took. I only made $12 this trade because I put it at break even, but I actually had a reason to put it at break even. I didn't like the price action. First of all, swing structure, we're in the correction of like, this was the bullish swing structure correction, so this trade was already lower probability. The first one won, but the second one, like, it formed a bearish pin bar and then bullish engulfing candle while I was in the trade, and I saw that and I was just like, oh yeah, I don't like that. And what ended up happening was the trade lost, so I'm glad I put it at break even. And then I ended up taking, so that's like, you gotta read price action and know the objective, so that way you can avoid losses better. And then what I ended up doing instead was I went long off of this 5-minute demand zone. So the 5-minute demand zone is just a doji indecision candle before an impulse candle. You can see formed a doji, and then that bullish candle that formed a gap. Price came back and filled the gap, and I actually was late to this trade too, because this trade was taken at like 12 at night. But I ended up waking up and I saw my trade happen. I saw my trade entry, and I was like, oh, maybe I can take it still. And what it ended up doing was it formed a bullish engulfing candle and respected the zone. You can see the wicks underneath the zone. So hold on, let me get a drink of my water real quick. So it formed that price action, right? And I was like, oh yeah, this is probably a great trade still. and it ended up forming another demand zone, which was this candle right here, which I could have actually set my order there and got an even better entry and made more money. Well, actually, it wouldn't have been. Oh yeah, it would have been more money if I used the same take profit. Well, yeah, I could have gotten an even better entry, made even more money. But back then, I wasn't even considering that as a demand. Wait, no, I was, wasn't I? Yeah, I was. I just wasn't. Like since I just started trading supply and demand. This is my 3rd week trading supply and demand. Like I'm pretty new to it. Which also goes to show how good this strategy is, because even though I'm new to it, it's got a very high win rate, and I was able to execute it easily my first day. Hold on, I'm going off the rails, bro. Let me stay on tracks. Let me stay on track. Let me stay on track. So yeah, and then the trade came back to break even a couple of times. Don't put your stop loss at break even, bro. You can easily get stopped out in a winning trade, and actually most likely will. Sometimes it'll bottom tick or it'll top tick your entry and it'll go straight to take profit, but sometimes it'll give you a run for your money. Do not put your trade or your stop loss at break even. Please don't do it. This strategy has a high win rate. It will, I don't want to say save, I mean, like, you're not in danger. It has a very high win rate, as you can see. This one right here, that's on the 1 minute time frame. And then this is the 5. This is the 5. It has a high win rate. Like, just trust it, bro. Just trust it. You're trading 2RR, or you can increase your take profit to like key levels. You can increase it to the objective to increase your RR. Just please, whatever you do, don't put it at break even. You will get stopped out in a winning trade many times. I know, because it happened today. I know because I can look at the screenshots of my winning trades and see like, oh yeah, if I did put it at break even, I would have just gotten stopped out before the trade won. Do not, alright, do not accept the risk before you go in the trade. Anyways, let's move on to the next trade. So that trade won $550. Alright, so this is a trade where I lost $200, right? And basically, this wasn't really this wasn't at all a systematic trade, right? This was, error. This was a human error. So this is what I did, bro. That's, first of all, it's not even an indecision candle. It's a same body candle. It just formed like, it just created an imbalance after the candle. So, but that's not what I look for in my trades. But second of all, the thing that made this bad is you're going short in a 1 hour demand zone. Even though selling pressure is strong, even though price ended up, this demand zone ended up failing, still the probability of success is automatically lower just because you are shorting in a swing structure demand zone. That is why this trade right here, this 5 minute demand zone, the 5 minute supply zone, you're shorting. Hold on, that's another trade, bro. Well, actually, I guess I can explain it. You want to take these trades, right? These substructure trades, these trades against the major structure trend. You want to take these trades to fill the major structure objective, which was filling this demand zone and then continuing higher. That is not what ended up happening, but this is how you can take advantage of trading against the trend by knowing substructure, by knowing swing structure. But if you do it for too long, you might get burnt. Okay, you might get burnt. And yeah, so you just gotta know. So yeah, I wouldn't even take this trade. So that's the thing. This one right here, this is better. It was a indecision candle before impulse move that broke that 1 minute low, and then you would target that low right there, and that trade actually ended up being successful. But again, it is lower probability because it's in a higher time frame demand zone, but the probability of it being successful is also a little bit higher because one, sellers were extremely strong. There was a 54-point sell candle, and two, for prices to form a standard confirmation sell entry in a demand zone in the first place, like, that's completely backwards. It was supposed to form like a double bottom or something, but instead you can literally see impulse sort of high. This is like a strong high, and then this ended up being a strong high as well. Price never broke above that high. So yeah, anyways, so yeah, lost 200 on that. Shouldn't have even traded it. I wouldn't trade it. And that's the thing, like, all of these trades that I won, like, I would trade them again. And then hold on, let me show you real quick. This trade right here, yeah, it lost, but I would 100% take this trade again. But if I see price action like this mid trade, then maybe I'll put my stop loss at break even so I can avoid a losing trade. But anyways, that's like if you're trading against swing structure. But if you're trading with swing structure, if you're trading with a major trend, then like putting your stop loss at break even, like, you're just asking to get stopped out, bro. So just don't do it. Okay, so the next trade is this. I thought it was an inverse fair value gap, brother. It literally just filled the fair value gap and filled your supply zone, which you were supposed to go short off of. So I ended up losing 425 there. Wasn't supposed to take it. And then after I messed that up, what I ended up doing was I missed this. Well, first of all, you already know I missed this entry for the supply zone, which if you extended your take profit to this low, it would have been like a 6 RR trade. You would have made like 40 points. No, you would have made like 60 points, bro. Somewhere around like 40, 50, 60, 6, 7 points. Like, it would have been. Anyway, so I missed that trade. I missed this trade too. That is a indecision candle, doji candle before impulse candle. You can see it formed a gap and closed below all of those lows. You can see this bearish engulfing candle is more than twice the size. It's bigger than these two buying candles. This is how you gotta read price action in candlesticks to know, like, yeah, this is a high probability setup. This is a high probability trade. Look at how strong the sellers are. And then I ended up taking this setup. This is an indecision candle. It's a bearish or inverted bearish hammer close to a bearish pin bar before impulse candle. You can see this bearish engulfing candle closed below both of those two wicks. Those are very great signs, and the same thing happened here. Those are very great signs that your trade is going to win. Okay, this trade took me 5 minutes to make $1,500. Look, 5 minutes to make $1,500. No drawdown, zero drawdown. Okay, it wicked past my entry, so I might have saw red for like a few seconds, and then after that, just nothing but green, no pullbacks. Okay, so yeah, that's a great trade. And then I think, okay, so there was another trade. I didn't take a screenshot of it. I should have took a screenshot of it on my phone, because I took it on my phone. Basically, it was the same trade as this, except it formed an inverse fair value gap during my entry. So I was like, yeah, it formed an inverse fair value gap. That's bearish price action, and I'm going long. That's reversal price action. And actually, inverse fair value gaps, like, I've been looking at them, and they actually be predicting or constituting, I don't know what the word is, but they signaling, yeah, they actually be signaling reversal that's going to happen, or at least a correction. So I put my stop loss 1 point above break even. I got stopped out, and the trade lost but thankfully I profited. So that's actually three winning trades in a row with better discretion, like avoiding this trade and taking that one, of course, and I avoided that loss because of noticing price action, and I won that trade. And then this was the last trade of the combine that I won. Yeah, this using discretion, this strategy has a very high win rate. But if you just use the strategy alone, then it still has a high win rate. But if you use discretion, like, you're just gonna be even better. Of course. Like with every strategy. Like, do not just trade every fair value gap you see. Duh. Duh, nigga. But anyways, so no, cause okay. So anyways, this is the last trade. This is actually the first trade that I showed you at the beginning of the video, right? And basically what this is there's a indecision doji candle right here before an impulse candle, right? Okay. And price ended up pulling back to the supply zone, right? And then it filled me in the trade. Now I will say I actually like missed the first entry for this trade. Excuse me. I missed the first entry for this trade because I was sleeping. Genuinely, I woke up and said to myself, I'm gonna try to pass the account today instead of tomorrow because, like, I don't want to procrastinate. You never know what might come up. Hey, my setup and strategy might not even hit or happen the next day, which is unlikely. Like, this strategy happens quite often. But anyways, it happens quite often. Any time frame, any let me not say. I mean, yeah, time frame, but any time of day, any time of night. My strategy is hidden. My strategy is happening. But anyways, let me get back on track. So yeah, that's an indecision candle before impulse. It did also break that swing low, and it formed a gap. So that's the only reason why I took this trade after I missed the original entry, because I don't trade mitigated zones. This zone was already mitigated. Price already filled the gap. But guess what? There's another gap right there that price didn't fill. So I can still take the trade. But it would have been better if I entered at that bearish engulfing candle instead, because this zone is already mitigated. You gotta draw a new zone, brother. But shoot, maybe I missed that because I was like, I literally just woke up in the morning. So yeah, price came in, filled me in again. Please don't put your stop loss at break even. Please. You literally have 4 opportunities to get stopped out in this particular trade before it takes profit. Please don't put your stop loss at break even, bro. Please, I'm begging you. Literally, the trade that I took tonight on my new XFA, if I put my trade at break even, it hit break even, I think 4 or 5 times before hitting take profit. Sometimes it literally just top ticks you in the entry. Sometimes it gives you a run for your money. Either way, you need to just keep your stop loss where it's at, bro. Please. Okay, but anyways, yeah. And then while I was in this trade, it actually formed another supply zone right here, and then another one right here, and then another one right here. So that's great. That's amazing. Like, bearish engulfing candle, top wicks showing rejected price, and prices respecting the supply zone in the downtrend. We're in a strong downtrend. This is an A+ setup. Indecision candle, right? Doji, and then it breaks the low, forms another supply zone. These are great trades. Now let's look at what it looks like on the 5-minute time frame. And I made $1,100 in this trade, by the way. So on the 5-minute time frame, this is what you see. I also saw, like, on the 5 minute time frame, I saw like bottom wicks showing rejected price, and I was like, okay, there are bottom wicks. So I ended up trailing my stop loss tighter throughout this trade, because the bottom wick showing rejected price, like, that's bullish price action. And guess what ended up happening? A huge bullish engulfing candle at 9:15 a.m. The market hasn't even opened yet. Why is there a big freaking candle at 9:15 a.m., bro? The market opens at 9:30. Like, what are you doing? But anyways, price literally just made a correction and then didn't continue lower. It formed a double bottom and then sort of reversed. But yeah, you just gotta know substructure, you know, prices going down, pulling back, going down, pulling back, going down, pulling back. And yeah, definitely use the 1 and the 5 minute time frame. And yeah, bro, this is my trade journal. Unfortunately, I've got a lot of break-even trades to journal now, cause I was tripping today, bro. I was tripping, missed out on so much money on my XFA, but it's fine. We move. On the bright side, I'm getting this video uploaded, and I am green in my XFA regardless, and it's just my 2 second days. Even though my execution was bad, I'm still green, so that like says something about my strategy. The name of my XFA is buy demand sell supply, just as a reminder of, you know, what I'm trading. And yeah, bro, many more videos to come, more live trading videos. I actually made a live trading video last night that I'm gonna have to edit, upload and edit. You can see, but bro, this shit crazy, bro. Look at how close it went to my TP. Wow. It's fine, bro. And then you can see this is like a 5 minute supply zone. If I put my stop loss above the swing high, then I actually would have won this trade. This trade in particular, price actually like came above and filled, I think, this supply zone right there. So I actually got induced in this trade, unfortunately, but it's fine. I still made money, and at the end of the day, I'm getting better and better at trading. And now what I'm gonna do is I'm going to edit this video and go to bed so I can actually like process the information that I've learned, instead of just like waking up tired and making the same mistakes again, putting the trade at break even. Like, bro, you know your trade is gonna win, right? You know it goes against market structure in your trading plan, right? You know your system is smarter than you, right? You know your system says, what does it say? Did I take it out of my system that you can't put your trade at break even? Huh. Maybe I said that because maybe I said that because I didn't even want to focus on putting it at break even. But yeah, never. Please don't put your stop loss at break even. You can easily and probably will get stopped out in a win trade. Yeah, bro, this is a touchy subject for me, I'm not gonna lie, bro. Because, like, even with my old strategy that I used to trade, I would put my thing at break even and miss out on 10 points, 20 points, 30, 40 points. Like, please just don't put it at break even, bro. Losing is part of the game. And not just that, it literally goes against market structure to put it at break even. It literally goes against market structure. I know you're seeing these trades. I know you're seeing these trades in prices bottom taking the entry. But sometimes it's not going to do that, bro. Sometimes it's not going to do that. Sometimes it's going to give you a run for your money like it did here. If you put your trade at break even, you're going to get stopped out in a winning trade. Okay? Look. 1, 2, 3, 4, 5 winning trades back to back, bro. Do not put, with discretion, of course, do not put your shit at break even. Like, see this, for example, you wouldn't want to go long here because price is, first of all, it's going up and pulling back. It's not moving in a straight line. Because like these trades, these home run trades, that is whenever price is going up and pulling back, and the correction is like almost as big as the impulse, which is what you can see here in these trades. But whenever price is moving in a straight line, that's whenever you would want to trade the doji, the indecision candle, or the opposing candle before an impulse candle. And I know if you look at this, you can see like, oh, that looks the same as this kind of. It's because it is the same. It's just momentum is different. It's just time is fractal. But we're gonna get into that later along the lines if you stick with me, because this is just the beginning, bro. Y'all all gonna be trading my strategy. Bro, this is not my strategy. Y'all all gonna be trading this strategy, bro. Just wait, bro. Just wait till I get them racks, Rhonda. Damn, I need to go to bed, bro. Y'all all gonna be trading this. Watch. But shoot, I think that's it, bro. For like $4,200, $4,200 in 3 trading days, trading supply and demand. And I just started trading, and I also got my first trading payout with Take Profit Trader. I think 2 weeks ago, trading supply and demand, but my executions were genuinely horrible. I could have made much more money than I did, but the fact that my executions were bad and I still got a payout my first week trading supply and demand on there, and it was on a foreign platform too. Like that just goes to show supply and demand is the method, bro. So yeah, just follow your strategy, bro. Just follow your strategy. You'll be good. Till next time.